For more analysis on the Fed decision and today's market moves, let's bring in the man who moves markets, Marko Kolanovic, Global Head of Macro Quantitative and Derivative Strategy at J.P. Morgan. Marko, it's great to have you back here at the NASDAQ market site. What'd you make of everything that went on today?
Well, we got a 25 bips cut, and we got the end of the QT. So I think net it's a positive. You know, we just had having a strong earnings season. So I think market a little bit overreacted. Obviously, we had a Powell press conference before 2:30. Actually, market was doing pretty fine. You know, so market was fine actually with decision, with the statement. So I think market overreacted, and obviously we had this a bit of unfortunate communication. So I do think market will adjust it and maybe recover. You know, so question is, does it take immediately, one day or a few days? We'll see. But I would say, like, look. Mid-cycle, this definition of mid-cycle, we tend to believe also that we are in mid-cycle. So would you rather take a mid-cycle and 25 bips cut, or we say end of the cycle and 50 bips cut? Or, I would rather take a mid-cycle and cut than and decent earnings, retail activity, jobs. So I would rather take that than sort of economy falling off the cliff and then aggressive hiking from equity side.
So with the statement and in the news conference, this lays the foundation for the market to do what?
So I think market will consolidate a little bit, but we do think market will go higher. And our price target is 3,200 for the 12-month out. Central banks globally are cutting. Economic activity, we have problems manufacturing, obviously, but the other side services are actually doing quite fine. So we do think that sort of we will go through the soft patch, market will recover, and with the lower rates and more monetary easing globally, it can actually grow into the higher multiples. So we are actually optimistic.
Marko, the Fed's the lead clearly, but sort of buried within that is the fact that U.S. and China talks seem to have broken down. Whatever you want to use, not going to talk again until September. Where does that come into the calculus? At some point, it seems like we're just getting strung out.
Yeah, it's hurting global trade. It's hurting manufacturing. It's hurting cyclicals. And we are seeing that. If you look at the sort of market, market reached all-time highs recently, but it's very bifurcated. There are two markets. There's sort of defensives, high-quality growth stocks on one side, and on the other side, you have a sort of higher beta stocks, value stocks, and cyclicals. So this value segment really is almost pricing as if we are heading into recession for sure. And this other low volatility defensive segment and growth segment is actually pricing is a bit of a rich. So we do think so. So basically, that's a reason. That's a consequence of a trade war. And we think that it's very stretched. It's almost like a rubber. The spread between value and low volatility is at extreme points. So we do think that with some stabilization of economy, with the more accommodative central banks, hopefully some progress on a trade. And of course that's the biggest risk. That's still a bigger overhang. But we think actually that convergence can happen. We saw it a little bit with the semiconductors and some other segments. Obviously now today is a bit of a setback, but we think that process will continue, and maybe stuff that is very expensive will not go as much up. But there's segments of the markets which are almost priced for recession. So we think that can recover.
With this bifurcation of the market, though, Marko, I'm wondering if you're concerned at all about positioning and this notion of the crowded trades and whether or not that will exacerbate what could come eventually.
So we think there are definitely crowded trades, and both on the long side and on the short side. So specifically on the long side, we think these bond proxies, the very high quality, low volatility stocks, we think they're very, very crowded. On the other side, the other crowd is shorting value. So we think value is very crowded short, and it doesn't need at this point much to converge. And if you remember yesterday and the day before yesterday, we saw very big move in energy. So look, for instance, oil and gas names, like gas was sort of flattish yesterday. Some of these names were up 15-20%. So you clearly had the short squeeze. Again, some of these segments are shorted between 10 and 30% of their capitalization. Obviously, it's used as a funding trade for high quality and growth names. So we think that can snap back.
Okay, Marko, great to see you. Thank you for coming by. Marko Kolanovic, J.P. Morgan. How do you trade what Marko said?
Well, so the inconvenient truth is that this is a mid-cycle adjustment, and that's not a bad thing, according to Marko. And if you think about the market, a lot of people, there's a lot of positioning in this market that relished today's move and want more of it. And that's one of the reasons why I'm actually not sure we get a lot more of this, because I think when the dust settles, central banks are still unbelievably incredibly accommodative. And as we all just said, like a 3% pullback, who cares? I mean, we're up 20%
Wait,
this
how
year.
are you sure we don't get a lot more of it if we do a rate cut, the first one in 10 years, and the dollar rallies to a 2-year high, and we know that we need a lower dollar, right, for things to keep going? How is everyone so certain that it's one and done at 25 bips? And I believe that's the question we're all going to have to ponder with for a while, because to me, if they change course and they start to raise at some point because the data gets better, is that good for risk assets?
All right. Well, we've been talking a lot about how Powell performed and how he did today. We're actually going to grade.
No, we're not.
Chairman Powell.
We have to.
Yes.
Have to.
Does he know that? Is he watching?
I hope he usually watches, as I understand.
Yeah, well,
Pete Najarian, why don't you kick it off? Your grade for Powell.
I'm throwing up a B-.
Wow.
Here's what I think. So I think the actual cut was an A, but I think the communication factor was at least a C-. So that sort of balances it out. I put him in a B-. I think he's in an impossible situation. I think you mentioned that. And because of that, he did the right thing. His communication skills sometimes are lacking, and I think that's what people had a hard time with today.
Guy, why don't you give us your grade?
I'm going to go to me because Tim is still writing. I give him a gentleman's C, Mel. A gentleman's C. For all the reasons that Pete said, impossible situation, and he's in this job now, how long? What's about 16, 17 months? And he still hasn't figured out how to talk to the media and to talk to the market. That should give him an F, but you know what? For the effort, I'll give him a C.
So I'm going to, anytime you're grading, you have to go on the creativity, the technical score, and then the overall score. Wow. Look, on the technical score, I give them a D. I have no idea what the Fed is doing anymore. I have no idea what we're judging them on. They used to be data dependent. I don't really know what this Fed told us today. In terms of creativity, look, the fact that he told us a mid-cycle adjustment, he could have articulated this better, but the bottom line is the difficulty factor of this maneuver was a 720-degree Hamel-Camel, and therefore it's an A. Overall, it's a C+, because frankly, I'm disappointed with this Fed, and I think they could have handled the entire 2019 year better.
Dan Nathan.
Yeah, listen, I just give him a D because what I think of what's going on here is pretty shocking when you think about it this far in the cycle. I just said it here. He's been pushed around by the markets. He's been pushed around by the president. There is no crisis right here. In my adult life, every rate cut, for the most part, has been to match some sort of financial crisis and the threat of it spreading. The only crisis I see right now is in our institutions, and I don't think Jerome Powell did a very good job in instilling confidence in the independence of the Fed today.